Good morning, everyone. How are you guys doing today? How was yesterday? Did you guys take any trade yesterday? Because yesterday, after I left, we were looking for there were longs going around here. Then after that, it came back down again as well. Now watch from where price came down. Watch this thing. Watch this order block. Okay, price came down all the way down again, tapped into this order block, and then flushed again. So we did not get an opportunity, but the people trading in afternoon session would have got an opportunity. Okay, so it's 9:30 already. So without wasting our time, let's start analyzing NQ. Okay, let me just delete some of prior. Okay, so previous day's low is all the way here. Price is already trading above previous day's high. At least that's what I can see. So previous day's high is 29,558 and previous day's lows is 28,910.25. So let's just adjust this. So it's 558. This is 910.25. So this is exactly where previous day's high and previous day's low is. Moving on to 4-hour time frame. What did we notice today? And what did we notice yesterday? Price closed strongly before under 4 hour under weekly low, and then gave us a sharp reaction out of it. So if this is supposed to work, then the target of this trade on 4 hour would be previous week high at the least and some points up higher. Okay, so our bullish bias is still active, but that's just an observation. We'll see what market provides us today. Now watch this. That is a 4-hour Fair value gap. Right here, I know there is no liquidity sweep, but we will still mark this level just in case if there are some orders pending up there and wants to come down a little bit. Okay, or it can flush all the way down as well. It all depends on market. So on 4-hour time frame, as you can see, price is continuously moving higher. The drawn liquidity now, it has already swept this high, and should now be looking for this high and at least 30,093 this high. So let's move to 1-hour time frame. Let's see what is happening here. Okay, 1 hour is still an uptrend. Price is trading in this bullish order blocks 1, 2 and 3. Okay, nothing much on 1-hour time frame to notice. No fair value gaps and stuff like that. So, and it is trading in this bullish order block, but this is not the perfect order blocks as well. Look at this, price did not close above this high, it just has closed exactly at that high. So let's move to 15-minute time frame. What are our session highs and lows? So session lows, London session low is all the way here, sell side liquidity. What is that? 29,572. There is another session low, Asia session low, which is still open, which is at 29,396. Okay, so we have these two as session liquidity. Now see what price has done. It took out this buy side liquidity of London session high gave a good candle closure. Now it has given a structure change on 15 minutes. So if this structure change continues, then price should be moving all the way low. If not, watch this. This is a good 15-minute liquidity sweep and V-shaped rejection. So this fair value gap and this fair value gap must work because it is overlapping with this order block, and just because this touch came in the first 15 minute of market open, we are not going to enter this trade, but at least we know what we see in all the time on 1 minute time frame or 15-minute time frame or 4 hour time frame. This context works, and that is what we all what we need. Okay, so this is it for in terms of analysis. Just 15-minute for value gap. Now let's wait and see if we can get another trade like this. Now watch this. How did it go? Liquidity sweep, got V-shaped reaction, but this liquidity sweep, there's a lots and lots of way. It did give its target, so yeah, today it could be a fast bullish momentum, because if market wants to reach all the way till 30,600, it's still 800 points away and it has 2 days. Okay, so let me just quickly check the news what we had. I believe we had CPI data today. US initial jobless claims, it came down better than expected. If jobless claims are better than expected, which means economy is growing, economy is growing, which certainly means that rate hikes can be a part of Fed's initiative. Okay, rate hikes, generally when rate hikes come in, it can be seen as two way. Rate hikes might not come in, but it can be seen as two way. Economy is developing, and even if the rate remains stable, economy is progressing, which means country is progressing, which means market should be going up higher. That is what I believe. This is not what I know that's how market works, but this is what I assume, right? Okay, so today we are looking for bulls, as we have seen 4 hour time frame, weekly time frame, and everything says us to be bullish, just like yesterday same thing happened. Was it yesterday? This is Tuesday. No, this is not the one. Okay, yesterday, watch this. I was saying the same thing. London session high was strong on liquidity. It needed a pullback before it takes out the liquidity. This was the sell side liquidity which I was talking about, and all of a sudden, like price that came down here, tapped into this fair value gap, internal pool of liquidity, and shot up higher from there, and then it took out London session high. So once you know where the drawn liquidity is, it becomes way easier for us to navigate the market. Have a bias. We can look for internal pool of liquidities that we can wait for price to tap into an internal pool of liquidity and see if any signal is generated on that level of interest. It might seem a bit complicated, but it is. Like once you once you have your context correctly, once you know how to form your context correctly, it will become way easier. Like why this 4 hour fair value gap is there, but why I said that it was going to be a weaker one, why I was saying that price is going to be a bullish, because we noticed 4 hour candle closure or 4 hour liquidity sweep below previous week's low. You got a good V-shaped reaction coming out of it, sharp buying coming out of it. And this was just yesterday. What happened was just a pullback. Yesterday, what happened? Just a pullback, and see, buying continues. So as of right now, what do we have today? As of right now, what do we have today? The price is trading above previous day's high, which is going to be bullish, and we're not going to use this, so I'm gonna take this out. But keep this thing in mind: we are trading above previous day's high. It simply means price is bullish. Buyers are trying, buyers are willing to bid more than previous day's value. I'm going to take this tab out as well. This is a weak tab, but because it has delivered all the way to its target, I'm going to take this off. It's just going to create confusion if I leave this here. I will see the signal again at this stage here. Okay, the price is right now in 4 hour fair value gap, and look at the buying volume. It's sharp 120k. I'm not looking for shorts, even if price comes all the way, like gives us a good signal right now and goes all the way down. I'm not looking for shorts, even if this is a 4 hour fair value gap. Okay, because this we have level of interest as 4 hour fair value gap, but CVD is not supporting. CVD is bullish. Like current 4 hour trend is bullish as well. Current 15-minute trend is also bullish. So I have to keep this thing in mind. Previous level works only when the previous level is of the same trend. There are chances of that working. Okay. Now, even if it goes all the way down from this 4 hour fair value gap to this, as of right now. So this is the strategy for the day. Looking for longs, wait for level of interest that gives us bias for longs. CVD looks bullish as well. We will change our bias just in case if we see a good signal. Just in case if we see a good indication like 15-minute structure changes or fast selling comes in. Until then, it looks bullish. CVD supports bullish. Signals are supporting bullish. Hence, we will continue to look for bullish trade. So, all in all, this week we are slightly above, we are just almost about 30 points into profit in 3 days. We did not take any trade on Monday. Monday was pretty choppy. Tuesday we took a trade. That was like 46 points of loss, and yesterday we took two trades. First trade was break even, and the other trade, first trade was break even, which if we would have just continued to hold, it would have given us 145 points. But irrespective of just because that was a reflex trade, I did not hold that and just took out as break even. And the second trade was 15-minute fair value gap, and all the things aligning together. We took that trade. We captured 75 points into that. So all in all, we are almost about 30 points for this week. We still have 2 days. We have bias ready. 800 points of move up higher. Let's see if price gives us a good level of interest and our setup into that in that 800 points. Okay, so last 30 seconds, then we can start looking for trades. Just just keep some things in mind. Things like this: no wick candle, no wick candle here. These becomes no wick candle here. These becomes general, like price for price to retreat back into. Okay, so keep these things in mind. Watch this: low got swept, this high got swept. There was another candle I showed somewhere around here. This high got swept. So just continue, like watch this thing, observe these things. Now once you see this thing, like we like not on 1 minute, but that's how we had formed a context yesterday. Look at this thing: 15 minute had no wick candle, which means there are higher chances the price would take this sell side liquidity. Okay, now when will it come down? That we don't know. We got an obvious signal, and the trade that I'm talking about, which was a reflex trade, was the trade to take down this liquidity. Okay, but because there was this weak level of interest, we did not enter, we did not hold this trade, or else that trade was a great trade. Just in case if this candle formation would have been up higher here after taking out London session high, this would have been a grade A++ trade. Okay, price is bullish. What we are expecting is 7 to 800 points of move higher from here in 2 days, 2 to 3 days, based on what has happened on weekly time frame and 4-hour time frame. Just because we know price is going to go up higher, or we are expecting price to go higher, we do not blindly buy longs. We still have to wait for the same thing. Once we have a drawn liquidity, we have to wait for setup to form, which is level of interest, signal on that level of interest, and supporting CVD. And price will give you trades. FMC has been out of play now. Now look at the price. It is moving so good. That has already moved 500 points from Asia session low. 500 points higher. The speed is not that great. I know it. The way I see it, I believe that there is a pullback that is required. There's a pullback that is required. Once we get that pullback, we will most probably get to see a continuation. Yeah. But this thing, liquidity sweep, coming down with V-shaped reaction for value gap. I know we are expecting, like CVD is supporting. Now this trade could be a good trade, but not a big fan. Watch this candle. There's almost no wick, and this becomes a drawn liquidity. Hence, I'm not going to take this trade. I'll wait for it. Wait for a better trade. Okay. If you watch it on 30-second time frame, still the same thing. Liquidity sweep, V-shaped reaction. This is a 4-hour for value gap, so it's not going to be that. Yeah, I would say it weak, but I would not say that it would not give any reaction out of it. But this is it: liquidity sweep, V-shaped rejection, supporting CVD, V-shaped react. The only thing is here would be a good entry because I don't see anything. I don't see anything else. My only concern is this candle. It's 73. This candle without wick. This is the same thing I was explaining all the way in the morning in the first 15 minutes. Why price becomes strong liquidity, and if I know that price is going to go up higher, I am not going to sell short here. Like, these are my observations. There's nothing as well as there's nothing supporting here as well. I can justify an order block here. There's nothing else that I would say. That's a 33 points of trade, 30 points of stop loss, against which your TP could be around this 91 points, as this order block overlaps with this fair value gap. Yeah, this is one bullish order block that is overlapping, one bullish order block right here overlapping with this fair value gap. So this fair value gap is going to be a good draw on liquidity. As of right now, we got all those three things, but we are not entering the trade based on two things. First, it did not give us a tap into this fair value gap. Second, there is this no wick candle, which I am not a big fan of. It becomes a draw on liquidity. Just in case if price goes up, takes out this high and does not take out this stop loss up here, then I will look to enter into this trade. Until then, I'm not entering that trade. So high of this green candle is 45.25. High of this candle is okay. Now it has tapped into this fair value gap. If price rejects from here without taking stop loss, without taking this stop loss, then I'll enter this trade. I am not entering right now. See, stop loss would have triggered here. Sometimes you will get all three things, and yet you will have to wait. Yet you will have to ignore that trade. So just because you got all these three things, 4-hour fair value gap, signal on that 4-hour fair value gap with supporting CVD as well, you just don't blindly enter that trade. I was explaining this thing in the first 15 minutes. This no wick candle becomes for price becomes a magnet for price to come to. Now what's this distance? It's not much of a distance, it's just 15-16 points, right? 15-16 points against the 70 points. Now price can come with speed and can take this out. So why do you want to enter shorts here? Why do you want to give away your 15 points as well? Why would you enter here knowing that price is highly likely to take out this high? So these kind of trades are the ones that is going to save you. These kinds of trades are the ones that is going to save you from losing or consistently chipping away the money. Okay, it might seem insignificant as of right now. It might seem insignificant right now, but this will take your this will like give a blow to your mental capital. First of all, that you took a loss. Even if you tried, you took a loss. Now second thing, what will impact is you knew that this was going to be a draw on liquidity, and yet you entered the trade, right? You're just trying to follow the system, but you knew that this was going to be a draw for price. Even after that, you entered the trade. That is another negative impact on your mindset. Okay, now what would be the third one? If you continue to if you would have taken risk here, it would have been 40-45 points, and then you'll be in loss again for this week. Okay, even if you would have taken shots here, 16-17 points, and if you were risking the same amount irrespective of the points, then still again again same economical or financial loss. So those are the things. Learn about these things. Like, these observation works pretty good, but then you must have your own observations. These are my observations why like this becomes drawn liquidity, this becomes watch this candle, almost zero to no wick become drawn liquidity. Okay, add those things as your confirmations or cues that you look into market. Once you have all those things together, it will be easier for you to just enter into the trade and hold the trade. Okay, another 4 minutes and that 4-hour candle will close. I don't see any trade forming right now. Buying volume is increasing. We are still looking for buyer. We are still looking for buyers. There's highly likely that a fair value gap might set up here. Highly likely that a fair value gap might set up here. 15-minute fair value gap. Looking at this candle, open 749, close 748. So this is a red candle, which means it's overlapping with this bullish order block. So this will become a great level and great internal pool of liquidity for price to tap into. Yeah, just give me a minute. I'll be right back. I'll be right back in a minute. Okay, so nothing's changed for us. This 4-hour fair value gap, it's gonna get inversed pretty soon. Let's keep it at 4-hour time frame. Then the draw on liquidity for higher side is just going to be this. Buy side liquidity. What is the high? 94. Okay, come down 3 points. 3 ticks. Okay, so what this? It's 30094. We are 160 points right now. 160 points or 100 and, yeah, 160 points away from that drawn liquidity. We are almost getting this one internal pool of liquidity right here. Once we get that, we will wait for price to give us a tap into that pool of liquidity. Might take a while. I don't want to see a complete red candle coming down, like straight red candle. If a straight red candle comes down, that's bad, because all this 15-minute efforts of bulls will be taken out in one single candle itself. Okay, I'll keep that thing in mind. I want to judge the momentum as well as trade based on what we generally use: level of interest, signal on that level of interest, and supporting CVD. See, there's this small signal again. Slight liquidity sweep, V-shape reaction. If panel closes below, it's going to be order block as well. But at the same time, watch this candle, no wick candle. You will see how accurately. Okay, we got this parallel gap. Continuing to this thing, how often price will take out this no wick area first before moving somewhere outside. That's a good draw. Now watch this. Good, that's a great signal. That's a great signal for shorts. But what level of interest do we have? This 4-hour fair value gap just got inverse. Price closed above around here. Price did close above here. Okay. So now this 4-hour fair value gap got inverse. We got the signal. We have CVD. Volume is coming in. Volume is stepping in. But we do not have proper level of interest, so I'm gonna delete this 4-hour fair value gap now. All in all, we have 115-minute fair value gap as our level of interest. That's all. You know what would be what would be the greatest scenario for next one, two, maybe third, maybe second, maybe third. Let's this 15 minutes chops around here, makes a doji or something like this. The other 15 minutes taps into this 15-minute fair value gap and gives a great signal on this fair value gap with supporting CVD would be a great indication for long continuation. Until then, like if it comes down all the way in this 15 minutes, then most likely to avoid this trade. And it's not that price could not continue from here as well. Price can continue all the way, leaving a fair value gap here as well, which then would become a better draw on liquidity. Which then will become a good pool of liquidity. As of right now, nothing much. We have seen one level of interest develop, but we need to wait for price to tap into that level of interest. So this is part of trading. This is the boring part of trading, where you just have to sit with your hands. Nothing's happening. You're not getting your setups. These are the things that a trader has to tackle into. Within the first 15 minutes, we got a trade. We got a trade. If somebody jumped the gun, took the trade, shot, took a loss, and now they would be excited. They would be so eager to take trade and cover up that loss and get into profit. Now this causes revenge trade. Once, like, if you don't lose, you don't have. Uh, if you don't lose, you don't have to do revenge trade. Even if you like, this is not a professional advice, but something like you, if you be picky, okay, if you become picky in trades, the chance, like, when you have everything as per what you want, right, and you get that thing. Now if you take that thing into consideration, you took that trade, like okay, how to explain this better? So since last 3 weeks, we only lost one trade. We only lost one trade. Okay, we only lost one trade. Uh, we almost captured about 440 points. Captured about 440 points. Could have been more if you would have holded the trade, but that's what I'm. That's what how I captured and how I was displaying on during this analysis part. Okay, during this analysis part. So I captured 440 points in last 3 weeks, like 2.5 weeks. There was only one loss of 46 points, and that is included in that 440 points, right? So just because we lost only once, there was no, and we lost very small amount of points, very small amount of points. We are we are not even bothered of that loss. That loss is not getting onto our mind, right? It was just one loss. You can, and we did cover it up on the second day when market was moving good, right? So stop taking unnecessary trades. Stop taking the trades which you know has lower probability, and the chances of you losing will become less. Once you lose less, you start gaining confidence and you will start doing the same things again and again and again. Because I know everybody wants to win, and I want to win. I want to win every single trade, but that's not how market works. Sometimes you will get it wrong, but that's just part of statistics. Just part of statistics. Just because we only lost one trade out of 7 or 8 trades, right? One trade out of 7 or 8 trades doesn't mean that I'm the best trader. It's just about that I'm in that zone where I'm watching all the things correctly, taking decisions correctly. Why? Because I'm not looking for trades. Like there are certainly some trades which are so obvious. Like the reflex trade yesterday was like, I've seen that trade and I knew that was going to work. I knew that was going to work. Like my intuition was saying that trade is going to work because that signal was so clean. I've seen those signals so often, so many times in my past. So I know that that signal is going to work. But then as soon as I entered, I got a feeling that no, I realized that I did not take the trade as per my system. So I did cut the trade early at break even. Okay, so these are the things you have to just learn this thing. Try to not to take loss. Try not to take loss. And how do you do that? Try not to take the trade. If it is so obvious and falling into into your context, then take the trade. Watch this. I did see the signal here. I was explaining the same thing as well, right? See, liquidity sweep. Look at this highs. Liquidity sweep, V-shape rejection, order block. Was also explaining. I was also explaining this high. This candle high could be taken. The next candle it was taken. It did not take out the stop loss, but taken, which means the signal is pretty strong. The signal is still holding. But why did we not enter into this trade? There is no level of interest for us. No level of interest for us. If you look into this left side, there's no level of interest. Yeah. Yeah. The only level of interest for us in today's session is this 15-minute fair value gap. But I have also explained why I would not be looking to long this 15-minute fair value gap. If this 15-minute fair value gap, look at this candle. That's 15 minutes of efforts of bulls taken down in next 12-13 minutes. Do you still feel this is pretty bullish? Another thing that was bugging me is, look at this week. Liquidity sweep, V-shaped rejection. There's no fair value gap tap as well. Another thing, look at this week. This week is another reason why chances of this fair value gap failing is also in the books. Doesn't mean that we will not get a signal, or we might not get a signal. We might get a signal here. We might get a signal here. We might get a supporting signal here as well. Watch this. There's a lot of selling volume that came in. The price is not moving lower as it should be. You can see this thing clearly. Okay. Watch this. Look at the difference between price and volume. It simply shows that there are bulls trying to buy this market. Okay. But for us to enter into this trade, now we have level of interest. We have level of interest. But do we have a signal? Not yet. Do we see supporting CVD? If the signal forms here, then we might be able to see a supporting CVD. Now, watch this. If this fair value gap gets inversed within 1 or 2 green candles like V shape, I'm still not going to take that trade. I need another signal below this low. I need the signal to form almost below this low. A green candle here, a red candle down, and then V-shaped rejection making a breaker block or IFPG or something like this. That would become a good signal for me. Until then, this is like just the next one, like this red candle here just defines I should not be entering into this trade right now. And I'm happy to avoid any trade. Like I'm happy not to take any trade today. Even if I miss those trades, that's okay. Like this trade in itself, what this trade? This trade in itself was 120 points. Even if you would have taken out that this low, it's 100 points. Against which the risk was just 20 points. So that's 1:5 trade. Risking 200, you could have made five. You could risking 200, you could have made $1,000. Risking 500, you could have made 2,500 bucks. But if it is not as per your setup, you don't take the trade. Price moves. Price moves 500 points. You don't have to capture all 500 points. Out of that 500 points, as per your system, if it gives you 10, 50 points, 70 points, 80 points, 100, 150 points, take that trade. Why do you want to create your own trade, get into the trade just because the price is moving? And you might have noticed I did not take this trade. I was waiting for similar kind of setup here. I was waiting for price to take up this high and not take the stop loss for me to enter into this trade, but did not. Now watch why I am not blindly long taking longs into this 15-minute fair value gaps. Everybody would be taking longs, right? Look at this. Look at this break candle. Look at this break candle. Longs are getting wiped out. 73, 80, 80 points. Before entering the trade, watch the draws on liquidity. Price is coming down from here. Price is coming down from here. What are the draws on liquidity that it could take? I told you this fair value gap overlapping with this becomes a good draw on liquidity. But when it gave us a V-shaped reaction, it left a big wick here. And because it left a big wick here, it is high. There is a higher probability chance that this low can be taken out. Now if this 15-minute fair value gap gets inversed, this fair value gap has already been tapped into, so I'm not much considering that one. It has tapped and it has delivered a lot after that. So I'm not going to take that into consideration. But price is going good. Price is going good. Look at this. Clean move up, clean move downside. So good, 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 good indication that we might get a trade. Just be patient. It has not been 1 hour since market opened. We still have another hour. So it's not that I cannot see trades even without level of interest, without signal or without supporting CVD. I can see a lot of trades. What I am displaying here live is that discipline. I'm displaying how statistics will work. Once you start trading the way I am trading, I'll show you how statistics will work. How you will take consistent money out of market. Some months are going to be slow. You may not get as many trades as you would get regularly. Some months you'll get a lot of trades, and so obvious trades that You'll continue to make money if you follow the system correctly. Okay, like there was this rally that started from March 9. It lasted about 30, I guess, 30 days. March 9. There was 9 weeks, 9 consecutive weeks when price continued to rally up higher. What's this? Yeah, Monday 30th March. Okay, somewhere closer to here. What's this rally? One, two, three, four, five, six, 9 weeks of consecutive. Only 1 week was red, but this 9 weeks of consecutive buying going on. Now, during that 9 weeks, which is almost more than 2 months, you could have made a lot of money. I've seen a lots and lots of good setup forming in that 9 week. If you just traded correctly into that 9 week, in those 9 weeks, you would have made a lot of money. And that money is the money that you have to preserve now. It's as simple as that. Now watch what price did. Watch what price did. Oh, almost like liquidity sweep, V-shape rejection. Not the correct liquidity sweep that I always look for. Hence, no. I'm not still not changing my bias to downside. There's, in fact, there's one thing. Watch this. Watch this. This is the draw on liquidity for bulls. Why? The reason is there is 0 to no wick here. 0 to no wick here. So I continue to explain this. Price generally tends to move. Take out that first before moving. Even if it wants to move downside, you take that thing. Now let's see what is happening on 4-hour time frame. Watch this thing. This is the thing. It took a lots and lots of effort. 4 hours of effort to take the price all the way here. In 30 minutes it was all wiped out. Now what do you feel about this? Do you really feel that it's bullish right now? Volume, understand this, volume came about 150k into negative. Now as soon as job growth came, like jobless claims came better than expected, I was explaining the same thing, which means even there are two things that Feds can do. They can either keep the price interest rate at the same as it is, or it can increase the interest rate, because if economy is developing, like job is developing and everything, what Feds would do is they would lower the interest rate, give money or invest money into the market, so that people can start their businesses and everything, and jobs can grow and everything, right? Once that thing happens, Fed gets what they want to see. The economy develops, job growth comes in, right? And jobless claims come lower than expected. Now, now economy is stable. Everybody is having whatever they need. Okay, so that initial capital that Fed gave in, now they are going to take it back. How do they take it back? Now they are going to increase the interest rate. So, so imagine you were paying 1% on that loan. Now you're going to pay 4% on that loan, right? So would it not be better to pay off your loan? So that's how businesses are going to take money out of the market and put it into and give back to Fed. Or there are other things that uh, like interest rate. It's like people can also invest in interest rate bonds, where they can get the amount of like the percentage that Fed sets as interest, right? Not much into this, but these are just some small understandings that I have. Like if Fed sets interest rate at 4%, so and because it is backed by Fed themselves, they will pay that. So that is one of the safest bets. Like if you get 4% like fixed, you will guaranteed your bet is going to give you 4%, and obviously you will invest into that. Why would you risk it into the market? Okay, now this is one great this is one great signal: liquidity sweep, V-shaped rejection. Where it tapped into is this lot of blocks and stuff. I want to take this trade. I want to take this trade again. I want to take a trade something like this. 61 points of stop, 1:2. CVD is supporting this signal. CVD is supporting this signal. It is stepping into this fair value gap again, and this lower fair value gap as well. So we got the signal, we got the IPG, but I don't want to be taking an entry up higher. I want to see this, and to be honest, I want to be entering onto this fair value gap. Okay, kind of a risky trade, but I am willing to take this risk. If this fair value gap does not get inversed, um, as this is 1 minute BPR, CVD is supporting the signal. It is tapping into small 15-minute fair value gap right here. So that is a level of interest. We were looking bullish. Our draw on liquidity is also bullish. If it gives us that trade, it gives us this trade. If not, then it's okay. Stop is going to be 53 points, against which the target is going to be 135 points. If it gives us that if it gives us entry, it gives us that entry. Yes, there was another fair value gap right here. I could have taken entry here, but then watch this, adding another 35 points into 53 points is almost 88 points of stop loss. Not something that I am willing to do. Okay, it doesn't matter, price can move without me. I'm happy to see price move without me, but if it doesn't give me the entry where I'm looking for, I'm not going to take that trade. That's okay. But at least I know that there are still some buyers looking to buy at lower price. We will get another trade. If you look on to 30-second time frame, yeah, still did not get that great entry signal that I look for. That's okay. 1 minute was such good liquidity sweep, V-shaped rejections. It It did give us an entry into one of the fair value gap, but not a big fan of buying higher. 88 points of stop loss, not a big fan. Rather wait. Let's see. Let's see if price comes down here. What is BPR? That's a strong zone. In my risk tolerance, like 50 points, 55 points, I'm happy to take the trade. Until then, it's just about waiting. What's this thing? This fair value gap did not get inversed. Okay, this fair value gap has not been inversed yet. 50-minute fair value gap candle did not close below that. I'm not going to rush and take an entry into this trade at this fair value gap. The only place where I will take a trade is this level. If I see a good signal at that level. I've seen my draw on liquidity is 30,600, which is way much higher. Way much higher. I'm going to look to enter at 29,667. What is the low of this candle? 666.75. Going to look to enter the trade closer in this range, depending on how fast price is coming in. If I see any buying signals around that area, I will look to enter longs. Okay, let me adjust one of the setting. If it I am looking to buy, but I'm looking to buy at a lower area. I don't want to see any buying failure above here, and then price comes to this level. I don't want to see that. If that thing happens, like what would happen with this? This Ferrari get got inverse. It's now moving up higher. Imagine it does not create this high. after this good bounce, what would I feel? What would I feel? Buyers are getting weaker, right? I want to see this kind of good reaction at this level and then continue to move up higher. If it gives me that thing, I'll take the trade. If not, then we can just wait. There is no reason, no obligation for me to take a trade every single day. My job is to take the best trade. Best trade as per my analysis. If I have to think a lot before placing a trade, it's not actually not the trade. It's just something that you made up. Or not a higher probability trade. Look at this trade. Here I had to decide whether this will be taken out or not, whether stop loss will be taken out or not. Whereas if it was not there, I would have entered the trade. Price slowing down here, not a good indication. What is price doing with this? Now, for this small leg up here, we got a liquidity sweep and V-shaped rejection. But whatever signal we got, did not we did not get that signal at above the swing high. Just got that signal in between the swing high, swing low. Okay, so that is not a great signal for bears to continue downside. Doesn't mean it cannot push the price downside. There's still one draw on liquidity, which is this fair value gap or this 1 minute BPR. What is holding right now for this is fair value gap plus order block right here, this order block right here, this order block right here is holding. That's if something is happening on gold. Ah, same thing. Choppy. Look at the signal. Look at this signal. Liquidity sweep with speed, V-shaped rejection, fair value gap, tap. Anybody entering longs here would be making money. Could have entered this long here, but there's way too much risk. I'm not risking 80, 88 points, 88, 90 points on a trade where there is a London session lower is draw on liquidity and this liquidity sweep has a big wick. Not a big fan of that. Okay, I would love to see this candle like this without a wick. Just be like that. What does then? I'm gonna show you one more thing. This is 930. Value area low, value area high. Price is quick to be getting bought up. Value area low. This is good. Buyers are in control. Okay, tiny news that is here. Nobody has a Multman. The smoother process working with the government on AI. Chinese open source model are getting very good. Nothing much. Today is Thursday, July 10. What do we have tomorrow? Canadian employment change and unemployment rate, and that's all. No big news for this week other than this CPI or unemployment data that we got this morning. Wait, this really get worked. I don't mind. We would have entered longs if we would have got an entry here. But what this thing? There was a level of interest. There was a level of interest. What this sell side liquidity? It got taken out. We got liquidity sweep, V-shape rejection. Now this was such an obvious signal that I knew that it was going to work. I did not even need to see CVD, but as soon as I saw CVD, 1, 2, 3, 3 red consecutive candle, and against which we got 3 consecutive green candles. So this just says that this is the best signal for the day. The only issue that we had was it created another fair value gap around here, and just tapped into that and just ran a fire. At any point that was 90 points of stop loss, around 90 points of stop loss, and I don't want to risk 90 points. That's out of my risk tolerance. Because if you're taking an entry 30 points high, which means you're risking 30 points extra, plus you're making 30 points less, which means if your target was 120, you would be making 90. So your risk to reward would have become 1:1. If you want, I can show you. Right here. See, 91 points of risk, target 99 points. That's almost 1:1. Yeah, this would go all the way up high as well, but this is what our first and very obvious drawn liquidity, where I would have exited majority of my position. Okay. So what this? We got an obvious signal here, but and 4 hour fair value gap supporting CVD, and with this signal, great signal, but we did not take a trade because of this part here. Then on a weaker like this is also a good signal, but we did not have any level of interest. Price had already closed above 4 hour fair value gap, which got inversed, and I don't want to be taking a trade at that. Now my observation is that if price closes slightly above that 4 hour fair value gap, then it can reverse towards low as well. But all my analysis said that we are just looking for longs, and longs. So why would I be looking for shorts, taking a trade short when I do not even have a level of interest? CVD was supporting, but if I don't have a level of interest, why would I enter that trade? So we did avoid this trade. Then look at the fall all the way down. It's not that I did not show that this was the trade here. I did show that this was a trade here, liquidity sweep, V-shaped rejection, order block. I also warned that this was most probably going to get taken out. Okay, so that was the second signal that we got. This was third and the most obvious signal that I got. This was also like kind of a reflex trade. I had that thing in mind that this fair value gap once tapped, it might go lower. It held here into this lower 15-minute fair value gap. Okay, and lower 15-minute fair value gap, and it held that fair value gap. Unfortunately, we did not get any entry at the level of at the fair value gap that we were looking for. So yeah, three signals still did not. One we faded, one we ignored, third one we did not get entry. The risk was too high, and part of trading is also managing your risk. Now it is not that we will not get any entry. We still have another 45 minutes left. We could get a good trade. So this week in 4 days we are just up 30 points. Let's see what we have tomorrow. Tomorrow we do not have any news. The market is going good. Tomorrow is Friday as well, so let's see how price moves. Mondays and Fridays. Mondays are pretty much choppy all the time, almost all the time. And Fridays are generally days when options and everything expires as well. So people want to like many of the traders also want to go for a long weekend as well. So especially when price action is such messy, I feel that people will be taking time off, and yeah, people will be taking time off, and we might not get good setup tomorrow. That's part of trading. You have to sit through these things, sit on your hands, and just accept that yeah, we did not get any trade. Part of discipline is to it. Being conservative. Now this TP was hit. We did not get any entry. But keep in mind, if you can if you can just, even if you did not make any money, like even without me, if you are able to see all the signals without me, once you learn that thing, once you learn how what price is doing, and you stay calm, if you if you avoid entering into trades like this, okay, or trade like this, or if you can just see these kind of trades without me, that is your win. It's not always the PNL that is your win. If you can just watch what price is doing, you can sit there for 2 hours and just read out what is happening, okay, and you take the best opportunities that you get. That is victory. PNL will reflect over the period of time. If you continue to do this, like in just 2 weeks, what I've displayed is 440 points, right? Imagine me doing the same thing for next 52 weeks. So divide, so I can show you the math. It's going to be something like on an average, it's going to be like 27 into 400 Okay, let's just say 400 points. Assume 400 points. That's 10,080 points that I'll be taking out in a year. Now imagine, I'm just assuming that I have, imagine that I'm assuming that I have just uh, 5 contracts on all those points, which is going to be into 10. So that's going to be 108 grand. 108 grand out of the market. That's with just one account and keeping my quantity at 5 MNQ, which is not even one NQ full NQ. It's just one MNQ. If I continue this performance, averaging this performance throughout the whole week, throughout the whole year, it will be like 108 grand. That is more than, that is far more than average salary. Imagine you having 5 accounts. Imagine you having 5 accounts. That will be 540 grand in a year if you continue to do this kind of things. Okay, imagine having 10 accounts. That would be more than a million, more than a million in a year. Once you learn the skill, and it's not that big deal. You just need to sit there for 2 hours, 2 hours a day, 2 hours a day. Take the best trades that you can. Take the best trade you can. Some week you will get 200, 300 points. Some week you will be only be able to get 100 points. Okay, no need to rush the process. Once you learn how to sit there, once you learn how to take the best trades possible, once you have that, that's discipline. And I've seen a lot of people talking about discipline. It's like you have to be disciplined and everything, but it's simple. Once you know what you're looking for, the discipline part becomes so easy. The discipline part becomes so easy that you don't even have to work on something. Like me watching these three signals, I know that, I know that this was going, this signal will work, right? I would have easily captured 90 points, but against what? The risk was 90 points. Do you, are you saying that I'm going to risk 90 points just to make 90 points? No, I would never take that trade. My system says that I cannot risk, like I do not want to risk more than 50 points, 55 points. I don't want to risk more than that. I can let go of trades. I don't mind, because I know I will get opportunities. When I'll get opportunities, I will make big points out of it. I don't need to be trading every day just because the price is moving. So do not run behind price. Do not try to decode everything the price is doing, like this, here. What did price do? Liquidity sweep, V-shape injection, order block. Yeah, you can read that. I know we can read that, but that is not a reason. Like, we are not entering based on that. Reason is you need a level of interest for that. If there was a 15-minute fair value gap, it would have easily, like if there was a 15-minute fair value gap, then the signal would have been valid for us, for the price to deliver all the value. Until then, it's no. Now this signal is also pretty good. CVD is also, like, volume is also supporting that signal. It took out this buy side liquidity and is most likely moving lower. But are we entering into this trade? No. This is just an internal liquidity. This is just an internal candle liquidity. I don't want to be trading that. Internal pool of liquidity. If I have something like order block, breaker blocks, stuff like that, then it's good. Be patient. You will get your opportunity. When you get your opportunity, you will take money out of the market. Just like yesterday, it just took 4 minutes for us to make that 75 points. 4 minutes. This is the trade I'm looking for. I'm still not into this. This is the trade I'm looking for. PPR right here. Untapped PPR. Signal was pretty good. Supporting CVD was supporting. Came into this value gap as well. So I'm looking for this, but let's see. We may or we may not get signal. We may or we may not get price tap before we are done for the day. Now again, watch this. Also part of this is liquidity sweep, V-shape projection, for value gap. Oh, sorry, IFPG plus FPG. This is a good PPR. Anybody wants to look for longs could look for long continuation starting from here. 38 points of stop loss. First target would be this 50 points, and the other remaining targets would go higher. Not a big fan of this trade. It's in the middle of the zone. That's in the middle of the zone with no level of interest. The signal has been generated without any level of interest, so I don't want to be entering into this trade, but yeah, I can watch some of the signals. Price has slowed down a bit after 30 minutes of violent fall, almost 300 points of fall in 30 minutes. Price has slowed down a bit. Why would I not take this bearish signal, and why would I be supporting this bullish signal? So it's said price has taken this support on this 15-minute value gap, which means it would be looking to move higher. So the chances of bullish signals working is going to be way much higher than bearish signal working. Okay, the reason why I was saying that this was a trade right here. I'm not entering into this trade specifically because I know there's a wick here. I know this is untapped here. If it wants to move down, it can move down. I'm happy to not to take a trade. I don't even want to try, because once you start trying something, you start uh, getting away from your discipline. So what is discipline? Is just to stop yourself from trying something instead of like just execute the setup as planned and waiting for the setup. This is something in the middle. I can see I can make money out of it. How much points? Like this was the trade I showed, 50 points, right? What was the risk? 38, 39 points of risk, 50 points. 50 points is generally where we start taking partial. So also this was high. Could have easily booked 50 points. Done for the day, but not the way we trade. Not the way we trade. We need a level of interest. Without that, we do not enter into a trade. There's this order block. Let's look at this high. There's one of the order block right here. Trying to take support here. Moving up higher. Could be looking to take out this high again. Okay, this liquidity has been swept, so I'm going to take this out now. Now, watch this thing. Two things can happen here. Just in case if price came all the way down to this BPR and looks for support, and this remains the same, what this thing, small trend line, this is also one kind of liquidity, trend line liquidity. What I would be expecting is price came down fast, tap into this BPR, give us a good signal, and could be able to take the high. Okay, as one of the things. So at this point, what are we waiting for? We are waiting for price to take it and come back to this BPR and probably move higher. Our draw on liquidity is on a higher time frame is 30,600, so we are still looking for bulls. There's no reason for me to look for shorts. Like, there's no reason for me to look for shorts right now. I do not have anything, any level of interest. It's 11:05. We still have 25 minutes, which is almost 250 minutes for value gap. I feel almost at the time. If we get to see a good level of interest getting printed in this 30 minutes, then I'll be waiting for some longer time to take a trade. But if not, then that would be it for the day. This was one of the steps we could have taken. We could have, like, there's no level of interest. I can see a lot of trades like this. I did see trade here, but unfortunately price just stepped into the first presented, like first bill value gap did not come down to this BPR. Then it took support on this order block, so it went higher, took up this liquidity, came back down, gave us a good liquidity, V-shaped rejection, fair value gap, and BPR here, tap into that, when it is now moving up higher. The next round liquidity is definitely at 928, which is still 70 points higher, but not looking for any trade. I'm waiting. There's no level of interest for me to look for until and unless price taps into this BPR, which is also now concerning as price has already moved higher. Let's see if price gives us something. I'm happy to not to take a trade, as my job is simple. Take the best trade possible. It's boring, but that's how you become consistent. Just taking best trades, A plus plus trades, the trades that are so obvious. What this inversion? Price never closed below this value gap. It did, but then what does it's how weak it closed below this value gap. This is generally an indication that buyers are not in proper control. You will see inversions, like you'll see like there is such an obvious inversion. What I'm expecting is price to hit 30,600 in next at least 2 trading days. That is what just my expectations are. And bulls are also looking pretty good. They're still buying. Maybe in afternoon session you might get a trade, but I don't want to be sitting in the afternoon session knowing that it can easily be manipulated. Majority of the volume comes in New York AM session where good signal, like we got three signals today, right? One failed, one we ignored, second, third we did not get entry. So fourth also we got signal, but there is a continuation signal in the middle somewhere without any level of interest. Hmm. Okay, if I get to see this here, what is this? Very order block. Just in case if it prints something like this, 34 points, we'll be looking for these equal lows. Not until it forms. It is what I'm expecting. If this candle goes red, we will get third consecutive trade on CVD as well, which will be a good indication for supporting our signal. If it stays green, then this trade will be off. Still not the best trade. Okay. Now we have to wait for another signal. It's 11:13 and it's 11:14 in 1 minute. This is the time of London closing. Last 15 minutes, the last 16 minutes of London closing. Generally, what price does is it creates a high and low for that last 15 minutes, and we get a trade into that. Hmm. Okay. Be ready. If we get this, okay, we might get a fair value gap here as well, which will also be a good indication if this 15-minute closes up higher. Or let me see. Do I have any closing session? Yeah, we do. Look at the series of green candles up here. If we get a series of red candles right here, we will be looking for shots. We'll be looking for shots, but if not, then let's see. Two possibilities. $38 points of series of red candles here would be a great indication for a small reversal. Now what do we get? We got liquidity sweep with speed, coming down with speed as well. This is a potential bearish order block that will be forming here if it goes all the way down, closes below this red candle, closes below this green candle, and then if it tests back into this, it possibly might get a short opportunity with 40, 43, 45 points of stop loss. We will be looking for about 100 points from here. 100 points from here. 100 points, yeah, but only if we get a good closing. Again, I don't like this thing. Don't like this candles without wick. That becomes a raw on liquidity. The reason why I'm looking for a short is this. For this, when this selling came in, first of all, it pierced through this for value gap, all the way, took down the stop losses all the way down, right? It also took down multiple lows here, like couple of lows, this low. Yeah. I'm looking for short. We might be open for short. Looking for short if candle closes below this green candle. Right, we got 3 consecutive green against 3 consecutive red. Okay, low has been taken down, but did not get a good candle closing below that. If I want to enter early, then I can enter right now. Might be a good opportunity for taking down all the lows here, so I'll be looking for that. But for that I need to see a good candle closing below the lows, 850 and so on. Okay, no candle closing yet. That's no trade. I'm still gonna wait 1 more minute. The more time it takes, it's just going to be a weaker signal. But look at this CVD. What this? V-shape. I don't want to see any green candle. I don't want to see any green candle before closing below this. Will not be a great sign. Price is struggling to close below this low. Okay, price has closed below this. Price has not closed below this, so, and also closed in green candle, hence I am avoiding this trade. It's 11:21 and I don't think there is any trade coming up now. Okay, that is if we get a good prevailing gap somewhere around here, like this small prevailing gap. So very small. Tapping into this prevailing gap, but unfortunately we did not get the free shape displacement that we are looking for. Took down the low, but without any candle closure below that, it just becomes weak signal. See this? This is the reason why we do not enter before the signal is generated completely. Anybody entering before the signal getting generated, expecting that price would do something like that, would be right now sweating that their stop loss might get taken out. If price continues to close up higher, then we might get a 15-minute prevailing gap right there. But there are concerns below this low, this equal lows, this equal low, this this candle without this candle with a long wick, this BPM. That just creates concerns. The reason why we do not enter before the signal actually gets printed is this, and it must satisfy that condition as well. Anybody entering here like that low has been taken, but there was no proper closing below that. Two hours into this trading session, we did not take any trade. Price continues to close up higher. We might get a fair value gap here. 15-minute fair value gap. Price takes out this low, give us a good liquidity sweep, V-shape reaction up higher, then we can be targeting this high. Taking down London closing low gives a good signal. We can move. We can look for a higher continuation. Let's see if price gives us that trade. Suppose I'm going to try one shot right here. We'll be targeting this low here. CVD is here. Price made high, CVD volume did not. We got small liquidity sweep, V-shape rejection, bearish order block. Fair value gap has been created. I'm looking for price to come into this fair value gap. Not the reaction that I was expecting. I wanted to see a continuation. It did not give us that continuation. Risk is too small, so it's okay. Just 16, 17, 15, 16 points. Yeah, this green candle, if it would have closed in red, I would have holded this trade. Now I do not have conviction into this trade. Yeah, I'm gonna put my stop loss at break even. If it hits, it hits. The reason is that it is weaker signal, should have just went into favor right away, and because it already came and tapped is low. It's a weaker trade. I don't want to be holding on to this trade. Doesn't look that good. It's taking, like, it has slowed down a bit. If it wants to continue after this red candle, it should continue. If it does not, then look at this volume. Price took down low, volume did not, uh, which is obviously a bullish a little bit. Not a good trade. I don't want to be holding this. I think I should cut this trade. Okay, there's no risk. Let it be like that. Okay, one small try. Break even got hit. Let's see if we can get this trade here on this 15-minute value gap. We took a small stab at shorts here. There was no proper level of interest. I was expecting price. I'm expecting price to come to this 15-minute fair value gap. If London session closing high remains open and price taps into this 15-minute fair value gap, gives us a good signal for buying. This will become a good draw, and then high will become a good draw. The reason I exited was this volume part. When price took down the low, volume did not even go all the way to low. That was the reason why I kept my stop loss at break even, and break even got hit. Small drive with just 15, 16 points of risk, 16 points of risk. Here, 93 points, yeah. They might get this trade. They might get this trade. Just almost into lunch session. Prices slowing down. Look at the bricks coming in. Volume has stabilized. It's getting boring now. Look what price is doing since last 15 minutes. It's just has slowed down. There's only one 15-minute fair value gap right here, like just still open. Yeah, I feel that price has already slowed down a bit. A lot of picks are coming in. This fair value gap is still open. It will take some while for price to come down. I would have liked to see price coming down and like in this 15 minute, but it did not. And I do not want to be trading into lunch session where price just slows down, manipulates a lot. Our draw on liquidity is higher. like later in the session, maybe in PM session, we might get a good long continuation of higher. As of right now, I do not see any trade. Volume has picked up. Volume has picked up, but we do not have any level of interest or signal onto that level of interest. Just because we have a drawn liquidity and volume is supporting that drawn liquidity doesn't mean we enter into a trade. Okay, so yeah, we tried one break even trade, small risk, 15-16 points of risk. If it would have worked, it would have given us 50 points. Did not work. Went about 10-15 points in our favor before returning back and taking a stop loss at break even. Okay, so this is it for me today. I don't want to trade into lunch session. When price slows down, we'll be back tomorrow again. If price gives us good opportunity tomorrow, we'll take trades. Okay, see you guys tomorrow. Have a good day. Trade responsibly. Have a good one.